Hello, I'm Kimberley Dondo, Digital Content Manager, and welcome to In Conversation With, the podcast series that delves into the world of financial services and brings you face to face with some of the most notable figures in the industry. Listen as we discuss topics that are currently facing the industry and hear from visionary CEOs to disruptive innovators as we bring you a diverse array of voices and perspectives. We'll explore the challenges they faced, the lessons they've learned, and the insights they have to share about the ever-evolving landscape of financial services. Hello and welcome to In Conversation With. I'm Kimberley Dondo, and in today's episode, I'm joined by Matt Evans, Portfolio Manager for 91's UK Sustainable Equity Fund. Thank you for joining me today, Matt.
No problem. Great to be here.
So Matt, could you give us a bit of a background into yourself and how you got started in the industry?
Yeah, of course. So I started way back in the late 90s, 97, 98 at a Legal & General, which is a UK life company. And I joined a business there that was very focused in investing into UK equities. And I started actually in the back office doing administration jobs and started working for the portfolio managers, at which point I showed, a real interest in what they were doing and worked with the team there to produce their sort of reports to then learn as a trainee analyst and then to become a fund manager. So I've always been focused on UK equities. I think it's a fascinating market with great companies, and I've kind of evolved and developed my process from there, now working at 91, running a UK small cap fund and a UK sustainable equity fund.
So you've highlighted that UK share prices are looking increasingly compelling right now. So what factors are contributing to this appealing valuation level for UK companies, and what does it mean for advisors and their clients?
Yeah, I think it's been quite a while now that the UK has been seen as a bit of a subscale market with a challenging macro backdrop and a fairly unstable political situation, particularly following Brexit. And that's kind of led to a consistent outflow from UK-focused funds over quite a few quarters now. And that has kind of driven this opportunity, we think, in UK equities that has just kind of become a little bit I suppose, slightly ignored during these recent times as people have looked elsewhere for their exposure. We hear a lot of talk about, the great technological innovations in, countries like the US and where all those growth is. And therefore, people have just moved away from the UK. So the UK is a relatively small part of global indices now, and therefore to attract investors back in is seen as, not necessarily key to their investment strategies. And that's created, we think, this sort of valuation opportunity. But it kind of forgets the point that many UK companies are delivering their products and services globally. So sort of about 2/3, 70% of revenue from the FTSE comes from international markets. And therefore, there are many great companies that are being very innovative, developing great products and services on a global basis and benefiting from many of those structural growth trends. And therefore, we can see some real opportunity with great companies that are listed in London but competing very, very successfully on that global market that are trading at a discount to some of those global peers, which we think is presenting quite an interesting opportunity at this stage of the market.
Right. And how are international sales benefiting UK companies, and what sectors or industries are particularly well positioned to capitalize on global growth?
Yeah, as I touched on earlier, there's a vast range of companies that are generating a big majority of their revenues from those international markets. And it comes across quite a broad range of sectors, actually. So you can look at areas that are addressing areas of what we consider good structural growth areas, such as healthcare. There's sort of accessible finance, technological change, the energy transition. These are great structural growth drivers, not just domestically, but also internationally. And there are a great number of companies that are looking to address those areas within those sectors. So you can point to companies like, RELX and Experian that are really good sort of UK technology-driven companies. They might not be the Apples or the Alphabets of this world or the Nvidias, but actually they're using technology to deliver really compelling products and services to help their customers become more efficient, have deeper data insights than they might otherwise have. So we think those areas of technology that aren't the obvious technology sectors, but are benefiting significantly from those areas. We also think healthcare is a real strength within the UK as well. You know, we've come out of a pandemic of COVID, which was clearly hugely worrying for many people, but has seen a real pickup in sort of innovation in and around healthcare, and the importance of being able to develop and innovate medicines that can not only protect from events such as further pandemics, but actually help treat people who are suffering from really debilitating diseases. And there's huge innovation coming in those areas. And companies like AstraZeneca now are really at the forefront of developing novel medicines to really help treat patients that are massively underserved at this stage. So we think there's numerous areas, great structural growth opportunities, and a vast number of companies that are addressing those themes that are listed in London, but benefiting from revenues coming from global markets.
Right. And the UK market is experiencing tailwinds from regulatory changes, technological advancements, and shifts in consumer behavior. So could you elaborate on specific examples of these tailwinds and how they're creating opportunities for investors?
Yeah, so there's a lot of talk within UK about sort of the regulatory changes, and actually there's been a lot of recent UK capital markets reform. There's a real agenda that's helping or looking to encourage and support UK capital markets to become, I suppose, much easier to operate in for companies and investors. And I think those tailwinds are beginning to really come through. And we've seen the Mansion House Compact, which is about encouraging pension funds to allocate more money to private companies, but really in those growth areas and in and around infrastructure, which should really help drive UK GDP. You also had mentioning under the previous government of a Great British ISA. Now, the ISA structure is really quite an interesting way to say, but having one focus just on UK listed companies can help drive capital into those markets. And then the new government have just announced a pensions review, which again is a really interesting initiative, which should encourage the UK to reinvest in itself again. So I think there's some really interesting parts of regulation. I just mentioned that sort of UK being confident to invest in itself again. I think that's a really key part of the UK market. We've touched on before UK low valuations. Well, actually, a big part of that comes from the fact that UK is investing less in its own economy than many of the others. So in sort of gross investments, UK is at about 17% of GDP against other G7 countries that are at about 20%, which basically means the UK has been investing less in itself, becomes less efficient, has lower productivity, and therefore lower growth. So if you can really stimulate that ability for greater investment into the UK, then you'll really begin to address the potential growth opportunities and get GDP back up to higher levels, which we're beginning to see, and the government is certainly talking positively about trying to encourage that growth. So those regulatory changes in capital markets, we think, are going to be a great driver to bring more demand back into the UK market, as to encourage that growth and the confidence to really invest in those areas. And then you also mentioned sort of the technological advancements. Mm-hmm. There's a huge amount going on in those areas. And again, we can see UK companies have really good technologies that can be exported globally. And in those areas, those advancements are creating greater opportunities for many of the UK companies, whether it's in industrial products to help manufacture products become more efficient. There's some really good industrial-based businesses that are providing the kit machinery to allow more efficient production of goods. To areas like technology, I've touched on sort of the companies like Relics, Experian that are using technology that's available, such as AI tools, but they're integrating it into their own products, which they can then sell to customers. These are all great drivers of growth and opportunity for some of those UK listed companies.
Right. And in what ways are sustainable practices influencing these regulatory, technological, and consumer trends?
Yeah, so what we've seen, some of the listeners here, I'm sure, when you're a consumer and you're going to buy products, it's increasingly evident that the way those products are manufactured is becoming more important. And therefore, people and consumers do care about sort of the ethical production of goods and services, and also how supply chains are managed as labour being well treated, the ethical production, protecting the environment through those manufactured products. That's becoming more and more important. So we believe and can see evidence of increasing numbers of companies are fully embracing that approach within their own operations to become more efficient. But there's also a benefit of that. If you're more efficient, you're using less raw materials, then your margin should be higher. It should give you more pricing power. So those companies that are ahead of the game in these areas and really embracing good sustainable practices, we think are better placed to deliver better financial outcome and therefore improving share prices. So the regulations are playing a part to encourage more companies to move towards net zero, as an example. But those companies who are embracing it ahead of time are, we think, very well placed to start generating improved financial returns, keep investing in their business and keep driving that growth from an internal basis. And then if you're able to deliver products and services that are addressing some of those global challenges, from climate change to access to finance, to improving healthcare outcomes, then you'll get those structural growth advantages as well.
So what is your perspective on the current UK IPO market, and what factors have contributed to the stellar performance of IPOs so far this year?
Yeah, I think it's a really interesting part of the market, because UK has seen de-equitization for quite a long period of time. We suffered quite a lot of companies being taken over by private equity or overseas buyers, and there hasn't been the sort of new influx of IPOs. I think now we're seeing a greater interest from investors to get good companies coming to market where they've got very clear investment cases and a clear rationale for their IPO. In general, that means that they can invest for future growth opportunities. And the companies that have listed this year have had very clear investment cases around those growth prospects, which has attracted investors in. And because there's been a period of time with limited IPOs, the selling shareholders or companies that are raising money have come at very sensible valuations. So as an investor, we can invest in companies that we've seen listed, how they trade through cycles over many years. An IPO, we just don't have that knowledge and information. So you need to know that that starting valuation is as compelling as it can be. And that's what we've seen at this stage of the market, giving those IPOs a really good starting point, which we think is the right place to be. So it's been a great start. Hopefully we're hearing about quite strong pipelines of potential IPOs coming. So if they get that right balance of a clear investment rationale, good growth prospects, and a reasonable starting valuation, then actually it looks quite encouraging for IPOs over the coming months and years.
Right. And given the stated policy direction of the Labour Party, what are your expectations for the future of the UK IPO market, and how might this impact investment strategies?
Yeah, so Labour have been pretty clear about how they want to create an environment that encourages investment and growth. That being the starting point is very encouraging for the IPO market. So if you can create clarity and confidence in a stable market environment with consistent regulation and support, so everyone knows where they stand, then that should help attract companies that want to invest to get on and invest, of which IPO is a really attractive proposition for many companies, not all, but certainly for many. And therefore, the environment being created currently by the Labour government, supported by that commentary about encouraging investment and growth, and also some of the regulatory changes we've discussed earlier, should be a real positive for companies that are thinking about that IPO channel. And we think they're creating so far a pretty compelling case to continue the IPO market momentum from here.
Mm-hmm. Mm-hmm. And finally, how does the fund integrate environmental, social, and governance factors into its investment decisions? And how does this contribute to its long-term performance?
So the whole structure of the funds, and actually the sustainable equity team at 91, is to have a fully integrated approach to all those ESG factors. And we've done it in a way that addresses through developing real tools, in fact, because we believe that externalities, both positive and negative, are going to be better priced by the market. We've looked to develop tools within our research process to understand that and start pricing it. So we use what's called the Capitals framework, which addresses natural, social, and human capital. And that gives us a framework to really understand those elements I've been discussing about the internal operations of a business to make sure they're most efficiently run and minimize their risks, while also uncovering the opportunity set in products and services to drive that structural growth. So by having that Capitals framework, we can address all those issues of ES and G within every single company we look at. And we think those who address it well understand their risks in the best way and are addressing them over the medium and longer term, and can then develop and invest in products and services to address many of the global challenges that are out there, and help customers address areas of sort of real unmet need, will drive that long-term growth. So over the medium to longer term, that is exactly what will drive, we hope, the performance of many of those companies and give the funds a really good performance profile over the medium to long term.
Okay. Well, thank you so much, Matt, for sharing your insights on the exciting potential of the UK equity market with a focus on sustainability. I think this was a really great conversation, and hopefully we can pick this up again.
Perfect. I look forward to that. Thank you very much indeed.
Thank you for listening to In Conversation With. We do hope that you enjoyed it. Please do keep up to date with all our new releases via Podbean, Apple Podcasts, Spotify, and everywhere else you get your podcasts from. You can also keep up to date with all our new content published on the Money Marketing website, as well as our print edition Money Marketing magazine. So make sure to subscribe. Follow us on Twitter, LinkedIn, Facebook, and Instagram. See you next time.